Imagine if I just gave you $100 right now. What would you do with it? I'm pretty sure all the things that you wish to buy came rushing through your mind. But did you know if you invest that money into something, let it be anything, you could end up earning thousands or even hundreds of thousands of dollars? Yep, you heard me right. Stay with us till the end to know how. Hey go-getters, welcome back to The Early Investors. Another profitable episode where you can learn how to become financially free. In today's video, we'll be showing you how to invest $100 Beginner's Edition. Want to become the next Warren Buffett? Stay with me to find out all the tips and tricks to save your hard-earned simoleons. Before we jump into the next video, make sure to subscribe to our channel for more business-related content. So, $100 to $100,000. Where should we begin? Mind you, these are not the things you learn in school. So, most of you might be scared as to what will happen when you invest the money. You might think, am I taking a risk? Is it worth it? Here's the number one thing. Becoming rich ain't easy. And y'all know what they say, all struggles will eventually lead to success. So it's okay to risk because who knows? You might become a millionaire or even a billionaire one day. Remember, the more risk, the more potential. Well, enough blabbering I guess, let's get on with the video. Number 1. High interest saving account. This is the one with the lowest risk. An ideal savings account should have the following features. 1. It should be good interest, and 2. You should be able to access it whenever you want. Ally Bank, Marcus by Goldman Sachs, and Citibank are some of the good ones you can start with. Marcus by Goldman Sachs has an interest of 0.7%. Not that big, but it helps. The most beneficial part about a savings account is that it helps us a lot with emergency funds. So the next time you get unexpected medical bills or something goes wrong in your house, you don't have to worry about taking loans and ending up with debts. Number 2. Gold. If we had a risk scale from 1 to 10, this would be at 2. If you want to stop losing your money and keep it with you and earn more from that money, I have the perfect solution. Spend the $100 on buying gold. Did you know that if you purchased a nugget of gold in 2002 for $200, it would probably give you about $500 to $600 if you were to sell it now? You can do this by buying physical gold or through a gold ETF/ETC. But when you buy jewelry or any gold items, it can be a little loss for you because the person selling the gold is also trying to make a profit, which leads to you having to pay more than the actual price of the gold. Opting for ETF, ETC like Robinhood, Trading 212, etc. is a better idea in situations like these. Robinhood has earned a total of 36.49 million ounces of gold vaults all over the world, and its GLD is one of the world's largest ETFs in the world. Through ETFs, you can buy gold for its real value. This is one of the best ways if you have money and all you want to do is save or protect it somehow. But then, what makes it risky? The thing about this is that it depends on the opportunity costs. There could be more potential methods that could get you way more money than by investing in gold. Number 3. Low-cost index funds. This is an incredible and easy way to earn money without knowing stock markets or anything. With a little knowledge about it, you can have a dynamic power. This is a 3 out of 10 on the risk scale. The only risk here is that if your money is unprotected, then the government might take the money as tax and your profits won't benefit you. However, we do have a solution to that: the Roth IRA in the USA and the ISA in the UK. That way, you can earn all your profits and get loads of money. Here's something cool. Warren Buffett made a $1 million bet on the fact that investing money in the S&P 500 index would give him more money than professionally picked hedge funds over 10 years. Turns out, he won that bet. I mean, how could he not? Do you know something? Investing $100 per month on an index fund with a 7% annual return could end up giving you a whopping $123,000. Number 4. Real estate investment trusts. To begin with, think of a situation. You decided to collect $100 from 2,000 people. Now you have $200,000, okay? In the next step, you take this money and buy a property with adequate equity and rent it. The rent you get is split to all 2,000 people, giving you and them a passive income. If you live in the USA, VG6 by Vanguard could be an excellent choice. This allows you to get an average of 12% return, which beats the average real estate investors. You earn a lot of money from a property without actually buying a property. The property could be a house, a hotel, shopping centers, apartments, anything. The cool thing is that everything works by law. So they are forced to give 90% of all the profits to the investor, aka you. Number 5. Business. This mainly includes buying and selling items. Here are a few ways to do so. You could buy something of your interest, something that you have excellent knowledge about, and then sell it for a higher price and make a profit. Another suggestion is to go for something that currently has skyrocketing market value. The risk here depends on you and your ability to find great deals. But I could say that it will be about 4 out of 10. Number 6. Individual stocks. The risk rate of individual stocks ranges between 6 to 7. If you choose good companies with so much potential, investing $100 could help you earn a lot. How can you find good companies? Easy, check out Yahoo Finance. Through that, you can find the company's business financial statements, markets, and all other information. Here's a fun experiment that was conducted regarding individual stocks. A group of 100 monkeys was made to throw darts at financial pages, and turns out these stocks picked by monkeys outperformed smart hedge fund managers made by the marketers in Wall Street. This shows that, it's worth a shot. Number 7. Crypto. A lot of people who've invested in crypto have ended up being millionaires overnight. Cryptos can be classified into Ethereum, Ripples, or Bitcoins. All of us have heard about the most popular one, the Bitcoins, at least once in your lifetime. If you want to know more about Bitcoins, search for the white paper on Google. $100 of Bitcoins bought in 2015 would give you a roundabout of $5,000 today. Crazy, huh? That's a 5,000 return on your investment. Bitcoins use this method called blockchain that's not regulated by the government, and it's also not possible for you to create more Bitcoins. So investing some extra money that you don't need on this can tackle the situation. But the risk on this is a 9 out of 10. It is almost similar to gambling. Even though most people do make benefits, a lot of people lost money as well. Had you invested in 2017 December, you would have lost a lot of money in 2018. Even though it's risky, it sure can make you a millionaire, if you're lucky enough. Number 8. Lotto. The last one on the list, yes, Lotto tickets. Did you know that about 50% of people in America buy at least one Lotto ticket a year? Yet again, this is an extremely risky method. Even though the risk stakes are very high, people still do win it because if you win, you could make millions. The results are over the top if you're lucky enough. That is, if you end up being 1 in 14 million. You have 4,000 times the chance of winning an Oscar than a Lotto ticket. How crazy is that? So you can end up losing money in this case. However, all these methods have great potential and are very easy to be a part of. But before you do any of these methods mentioned above, the first and foremost step is to invest in yourself. If you do this in your 20s, even better. Investing in yourself is the best way you can get something back. By the way, have you checked out our tips and other videos on how to invest in your 20s? If you haven't, do check it out. And make sure to comment down below which of these methods you would try and why. Also, did you learn all the 8 numbers in Spanish? Let us know in the comments. That's it, y'all. Have a good day.